US and European stocks surged Tuesday, rebounding from the huge sell-off in recent days, even as China led another slump in Asian markets. New York markets jumped 2% in midday trading. Key stock averages in Europe ended even higher, with the Frankfurt market closing ahead 5%, but Shanghai closed down 7.6%. Its main index dropped sharply when the market opened, but then rebounded at one point to being down about 4%. As shares fell again in the afternoon, markets in Japan and Hong Kong that had rallied to gains also saw sell-offs. Japan's Nikkei index closed down about 4%, while Hong Kong's Seng rallied in the final hour to finish just ahead in positive territory. As Chinese stocks plummeted to their lowest levels since December, Beijing's central bank cut its benchmark lending rate by 0.25 percentage point to 4.6%. It was its fifth cut since November, the latest attempt to reassure investors that China is taking new steps to boost its weakening economy. The central bank also lowered cash reserve requirements for the nation's banks, effectively freeing them to increase lending. Worries about China's faltering economic growth pushed down global stock and oil prices on Monday, including an 8% plunge in China. Monday's slump included U.S. markets, which experienced a volatile day of trading before finishing down at least 3.6%. Market correction. Experts said U.S. stock markets were due for a major correction after nearly tripling since 2009. Joshua Brockwell of Outside Asset Management said corrections serve as a self-correcting mechanism that ensures stocks are fairly priced. If you think of it as a kind of tremor instead of a great earthquake, the ground is kind of letting off a little steam. Brockwell said, the market's kind of letting off a little steam right now, which is actually a healthy thing for stocks longer term. He said the correction may worry investors, but it's a healthy change for the economy that helps keep stock values from becoming inflated. Now that we have seen this retrenchment over the past couple of days, equities or stocks have gotten back to a fair valuation, and are actually cheaper, so it could be an opportunity for a longer-term investor to buy, he said. China's growing economy has been a major market for commodities and all kinds of goods for many years. A series of economic shocks, including a falling stock market and a surprise devaluation of the currency, have made investors question the health and growth of the world's second-largest economy. An economy that grows slowly will need less energy and provide less opportunity for investors in many areas. New York trader Ben Willis said the markets are reflecting a lack of transparency in economic data on the part of China. The Chinese economy, we thought, was growing at 7%. It's probably only growing at half that, Willis said. So a 50% reduction means you need to reprice, and that's what you're seeing going on in the stock markets and in the commodity markets. Chinese stock markets doubled in value over the 12-month period ending in mid-June, but the central bank put a halt to that rapid rise when it devalued the yuan currency on August 11. Bank officials called it a free market reform, but many economists and markets around the world saw it as the start of a long-term yuan depreciation to spur exports. An economic report showing weak manufacturing data last Friday triggered a massive slide in Chinese stock prices, and that was followed by the Shanghai market's biggest losses in 8 years on Monday. The rest of the world's markets saw those signs of slower Chinese growth as an indicator of a global business decline, and that ignited Monday's widespread market collapse. Chinese media downplay market drop. Chinese state media made little mention of the volatility in the market on Tuesday, with state television spending a large part of the day focused on preparations for a massive military parade in Beijing next week to mark the 70th anniversary of the end of World War II. On major websites, news of the market's continued turmoil was present, but conspicuously lower on the page. Overseas, some sought to cool concerns about the fluctuations in China's market and the possible impact on its broader economy and consumer sentiment. Australia's Prime Minister Tony Abbott argued there is no need to hyperventilate about China's market turmoil. From time to time, he says stock market corrections and the bursting of bubbles can spill over into other markets. In a rare comment midway through a financial quarter, Apple chief executive Tim Cook talked about his company's business in an emailed response to questions from the Wall Street Journal about an increase in iPhone activations over the past few weeks. Cook wrote that while he obviously cannot predict the future, performance so far this quarter looks reassuring. He also voiced his belief that China represents an unprecedented opportunity over the long term.